This is Rebecca with the Cat and Rebecca Show, Keep It Real Estate. And this is Brian Kavanagh with the Franklin Loan Center. And we're going to talk about some of the new things that have come out in lending, because if you've not purchased in the past 3 years, there are new disclosures where the lenders are required. So what should someone expect once we've got the offer in, escrow's opened, and now we need to get rolling with our loan?
Okay, so over the last few years, the government did go ahead and revamp and regulate what it takes to be a loan, what we need to do in order to disclose the loan, and what our recourse is as far as fees changed. So to protect ourselves, the lender, we make sure we put everything up front. So everything's printed out in the first few days of opening escrow or being under contract. Okay, then we try to adhere to that throughout. So this is what you can expect when you first go under contract. You put your deposit money and now you have an open escrow. Okay, we, the lender, as soon as we have an address, we have the borrowers, what we know about the borrowers, their intent to proceed, and the sale price and a contract, we now have an application. Okay.
And normally I try to keep the lender right away in the loop, because you do need to get specific fees from escrow so that they have their fees and title fees to you, because they do vary from escrow and title company.
They vary from that, and they vary based off of the type of loan that you have and what our loan amount is. So we immediately, upon getting the purchase contract or knowing the address, we get the contact information from the title or escrow company, whoever's going to be handling that, and we request a list of their fees, any fees that they know about that's associated with this transaction. Okay, so that we can go ahead and put it into our disclosures and make sure that we're all on the same page, meaning the borrower, title and escrow, the agents, and ourselves.
And that usually will be received for the purchaser in how many days after the open?
Well,
or what is
we like it to be within 24 hours. Okay, typically when you guys have a contract date, it's usually for 30 days. And sometimes that 30 days starts on a Sunday or a Saturday, so we've already missed a few days of work. Okay, the very first thing we do is we reach out to title and escrow, find out what those fees are. Typically, they will give us those fees within 24 to 48 hours. Usually they'll give them after they have receipt of the earnest money. To them, that's when their contract started.
Yeah, I know. I try to get you those fees earlier if it's me, only because I want those loan numbers disclosed.
Correct.
Those aren't going to change any, but
Correct,
I know
but
sometimes
not all escrow companies work that way. But once we have those, we go ahead and put them into the system, make sure all the fees all match, all the parties involved will have their contact information, phone numbers, and we know who the provider list is of everyone that's associated with the file. We go immediately and we disclose the file.
So when you say disclose, that means you're actually physically either going to have them sign that they received it if they don't have an email, or they can acknowledge through email?
Yes, well, we disclose the file. So the file is now disclosed either through email, through mail, or they come into us and we print them and they can sign them. So it can be disclosed. It doesn't mean that they sign anything,
But it
but
means
the
that
loan
they've
has been
gotten,
disclosed.
they've received the information that they know what all the fees associated. So they've actually gotten some sort of physical paperwork stating all the loan fees.
Correct. And so now we've already talked, maybe 2 or 3 days have already gone by, and the borrower can disclose. And in these disclosures could be the basic application telling anything about the borrower, anything about their credit. It can be a list of all the providers that are in this loan, whether it's the title company, the agents, the appraisal company, everyone that's in there. It'll list some of the items that are in there for the borrowers to protect the buyers. You have rights for this and that. You can have credit counseling here. Your credit scores came back as this. It's going to list a whole bunch of different, we're talking 40, 50, 60 pages worth. So it's a lot of information to go ahead and digest. Most of them could be redundant. They might talk about the appraisal several different times, but these are all just the basic disclosures to start, and they have the estimated fees that are on there. These fees are always estimated until we close the transaction. But those estimates, they cannot change more than 10%, period.
Okay. And so when you're talking about a closing disclosure, so
I haven't talked about a closing disclosure yet, but we send out these fees and we give them an estimate, something called a lender's estimate. The lender's estimate is all those fees we talked about. We got them from escrow, we got them from title, we have them from our own company. Any other things that we might know from the transaction. Maybe the seller's giving a credit here. Maybe there's no they're getting something back from the HOA company. All of that will be on the lender's estimate. That lender's estimate can also change throughout the transaction, all the way up until a closing disclosure goes out. Now, what to expect is the first few days we got the loan disclosed, and in the loan being disclosed, we got the lender's estimate out, which is going to be an estimate of all the fees that we got. From there, we go into the escrow, we gather more information, title reports come in, the appraisal comes in, more information from the borrowers, we get a loan approval from the underwriter, we're ready to move to the next step. As soon as we have all that, this could take anywhere from a week to 2 weeks, depending on everyone involved. There's several people involved in a transaction, as you know. Once we have that information, we go through and we review all the fees that are associated with the loan again, making sure that now that we've uncovered and everything's been investigated, has there been any other differences? With all the parties that are still involved, the fees aren't going to change, but there could be a new fee that just came out. Oh, well, now we need an engineer's cert because the patio is falling down, or we need to have this work done or something. So we might redo the fees again, put a new lender's estimate out, and then from there, immediately the next day, something called a closing disclosure. The closing disclosure, all of the non-recurring fees cannot change. They will stay the same. A non-recurring fee would be titles fee, escrow's fee, lender's fees, appraisal fee. These are the fees that will not change. Recurring fees such as taxes and insurance, those can still be adjusted because things can happen. You can change your insurance.
The closing date may not be exactly the date on the contract is what actually transpires, because a lot of times we run over, and then those...
Or under, and those days of interest are a recurring fee. Interest is a recurring fee.
And they'll be adjusted for that
They
new
will be
close
adjusted.
date.
Correct. Okay. So now we've gone 2 weeks. We've done our approval. We've done a lender's estimate, and now a closing disclosure. Based on some of these items, you always have to wait so many days before you can go to the next step. Like if we put a lender's estimate out, we can't close the file for a minimum of 4 days from a lender's estimate. If we put a closing disclosure, which comes after that, you cannot close the file for at least 3 days. Actually, you can't sign loan docs for 3 days until after that. Okay?
And these
So
documents
there's time
basically...
restrictions on these, so that if you have a closing disclosure, I signed it, but I still want to look at it. I want to make sure everything feels good with it. I have 3 days to review that and really feel good about it.
And that
Make sure
closing
everything's
disclosure needs to match whatever previous disclosures, so that any changes that came about, like a report of repairs or something that gets added in, is redisclosed, and the last disclosed items or the last disclosure they receive will match that closing disclosure.
Correct.
Within, I guess, 10%.
Well, the items that you're referring to within 10% variance, those are going to be items like lender fees. You always hear about lenders, oh man, they really gouged them at the end. It's like, no, we're making sure whatever we disclosed day 1 is the same as day 30. Those 2 items will match.
Okay.
Escrow, if escrow said they're only going to charge $1,000, it better be $1,000 at the end. Those fees cannot change. That's within a 10% variance.
Well, and I think this is an improvement over what we used to have, because at least the moment we are in escrow, you're going to have a disclosure going over all those fees that you have and have a really good idea of what those costs are. And if you have a question very early on, say, what exactly is that you're paying?
Yes, and it's really, these are all to protect you, the buyer.
Absolutely.
So that there is no hidden fees later on. You don't come to sign your loan docs and realize that what's this, $5,000?
Exactly. And it used to happen.
None of that is here anymore.
So the fees from the lender and those fixed fees that you're quoted from escrow will be the same at the end, and you know that very early on in the process.
You know very early on in the process.
We're going to say within the first week, depending on whether it's a
Correct.
holiday and how fast you get those
Correct.
fees out.
Escrow could be busy. There are sometimes when we cannot get hold of escrow, we don't have those fees, we will overinflate those fees. Those fees should be X, but we do X times 1.5, just so that we overinflate them, because you can always lower the fees that are on estimate, but you can't increase them.
And again, it's a good way to have the consumer protected, and why we've had changes. So for
Certainly.
that reason, so it does make a difference, and hopefully you've learned something about Loan disclosures and closing disclosures where your lender's concerned. Keep it real, estate.